Hello, everyone. Good evening, good afternoon, good morning, depending on where you're connecting from. I'm excited to be on this show today. This is Money Matters Live Friday. Every Friday is we come together to bring men and women who have great repute, men who have transformed their business, who are there to empower us. And today, Money Matters Live, we have two special guests who will be talking to us on how and what to look out for in choosing your insurance policy. And today, guess what? My name is Sandra Uko. I'm a Maxwell Leadership Certified Team member. I'm a member of the Toastmaster as the Vice President Public Relations. I'm a best-selling author and also an IT sales expert of over 20 years. And just recently, I got the Presidential Lifetime Award. And today, like I earlier said, I have two special guests. And in Morning Matters Live, what do we do here? It's a movement where we try to empower, teach, and bring our community how we can help impact our work. We are called to be a difference maker. We're called to make, manage, and multiply money. And in this Money Matters Life, we talk about savings. We talk about investment vehicles where you can save, put your money in, and your money can grow while you're sleeping passively. We talk about life insurance. We also talk about health insurance. We'll talk about businesses you can do in the 21st century, what platforms to put your business on for your business to thrive. And we also talk about means of getting your business out there to the world. You can have a great service, have a great product, but if you don't know how to get it there, the products will be with you and nobody will buy from you. But in order for us to know where to take our products to, we discuss about it. And we also bring men and women who have been success in different business and how they went through their business, how they can empower us, impact us, share their story with us, and also so we can learn. We do not need to reinvent the wheel. We can learn from others that have been ahead of us. Like I often would say, experience is an asset. You can buy experience anywhere in the market. You can only get it from people who are willing to share the information. Like I rightly say, leaders are those who knows it and shares it with others. And so today I have Debra Taylor, my mentor in the Toastmasters, and I have a financial colleague. Her name is Uche Akeeb. She'll be taking us on a deeper dive. We'll be learning from them. And whatever question you have, please kindly put it on the description button. And if this is your first time to being on this show, please kindly like, subscribe, hit the notification bell, and also help share with your friends. It is said when something is a blessing to you, you like to share it with others in order for you to bless them. So I'm glad to bring this guest on. Hey, I'm so excited to have Uche and Debra. I'm so excited. Good evening,
Hello.
everyone.
Good evening, Sandra. Good evening.
Hello. Glad to be here.
I'm so excited. And like I rightly said, I just mentioned your name. I didn't do a formal introduction. Eh? Please, can you switch up anything, electrical, your phones?
Okay.
So sometimes when you have too many electronic gadgets, there's always echoing. So I think it's fine.
Okay.
Can you check if you have your laptop or anything on? That can also add to it. So I think we're good. Uche, and do you have your laptop on?
No, I muted myself. I don't
So
have a
please, if you
laptop
have your
on.
laptop or your phone or anything on, that could cause an echoing effect.
Yeah, I don't have my phone on.
No. And I'm using my phone to participate. I don't have anything else on.
So why is it coming up? So we can go on. So I would like both of you to start.
Okay. You want one of us to just start first? I can introduce myself. Is that what you want?
Uche, you might
Okay.
stop.
I'm sorry, say again.
Uche,
Yes,
you can
I'm
start
here.
with the introduction. Who are you? My guest would like to, my audience would like to get to know you better. Then when you're done, Deborah would
Okay.
also.
Sure, definitely, yes. So it's my pleasure to be on here tonight. It's such an honor. My name is Uche Akeeb. I am the founder of Uche Exclusive, which is an African print clothing line. I'm also a two-time author, The Impact of Excellent Customer Service on Business Growth, which came out as second place of Best Published Author in 2017 by Independent Author Network. Find your passion and take action as well. I am a financial strategist. I am so passionate about teaching people how money works.
Hi, and I'm Deborah Taylor. I am, by the grace of God, retired and very happily. But before retirement, I worked mostly in the accounting field, and I am on to learn from Sandra and Uche, and to also tell you about some of my experiences that will help to point out the lessons that Uche has to give for us today. So listen carefully, especially to Uche, because you're going to get a very positive experience that we need to share with others.
Yeah, that's awesome. I think Sandra dropped.
I see a message that I can't read. The one disadvantage of doing this on the phone is the tiny little letters. Let's see, let's just say live stream. Okay, I can't read that. I guess what we can do, Uche, while we're waiting for Sandra to rejoin us, is maybe I can go ahead with some of the things that I know about insurance. Okay,
Yeah.
so one of the things that I know about insurance is that it is a safeguard for your life. It helps you in times that you might not be prepared for, so that you're not caught in a trap having to borrow or beg or set up unnecessary events in order to cover what are typical life events. Insurance is very important, and I have to say, there was a time that I did not believe in it. I didn't trust in it. And one of the reasons why is because of an experience from my parents. I mentioned to Sandra that in my lessons about insurance, one of the things I didn't like was that my mother had a policy that had a face value of just $1,000, yet she invested more than $5,000 in premium payments in it. So that when my father passed, she only had $1,000 to put toward his funeral. And I'm hoping that once we get to Uche's segment, she'll talk about face value of premiums, because that's something that people don't understand. And I got to tell you, the insurance agent did not explain that to her. She just trusted in him. The other thing about insurance is that I've learned term insurance and whole life insurance are two different things. Term is for the younger people. When things happen before time, they're prepared. Whole life is for those of us who live longer and maybe reach a certain age and don't have a huge nest egg that we can count on. These policies will take care of expenses so that your family doesn't wind up in debt. Like Sandra often says, you shouldn't have to do GoFundMes. And I'm with her. I hate the sound of GoFundMe lately, unless it's something that you're doing just to be charitable to someone else who needs help. A family should not be put in that position of having to beg to take care of the final expenses for their loved one. I myself have a whole life policy, which I got to check to see what's the cash value of it. That's something else I forgot about. People don't understand cash value in a policy. And I need to check to see what that is, because I wanted to make sure that my daughter didn't have to do what I did and what she once had to do. I had to take all of my retirement to bury both my parents. So when I got to retirement age, my retirement fund was very low and it ran out very quickly So I live basically on Social Security. Don't get me wrong. I'm not ashamed that I do because I do very well. I manage my expenses very well. I'm very strict about my budgeting. And you can do that too. So don't take it as, or, if I don't have something along with Social Security, I can't make it. We are a very smart class of people. It's just that no one is aware of how smart we are. We can handle those things, but we shouldn't have to. So those are some of the lessons that I learned over the years about insurance. We need to know that we can invest our premiums. We need to know that if we have policies now, we may not need them later. And our colleague Uche is going to give us a lot of information that will help us know these things. And then when you finish getting this information, please share it with the community. The biggest problem we have is the lack of sharing of information that will support us and help us and empower us. So let me turn it back over to Sandra so that you can introduce Uche.
Hi, thank you so much, Debra. And Uche, you might want to do your introduction. Introduce yourself. Let's get to meet with you. Let's get to know you.
Yeah, thank you very much, Sandra. Like I earlier said, I'm so passionate about educating my people on how money works. So I'm a proud financial strategist, also a two-time author, The Impact of Excellent Customer Service on Business Growth, and Find Your Passion and Take Action, because I strongly believe that once I know something, I have the moral obligation to share it to my people, right? And I'm also the founder of Uche Exclusive, which is an African print clothing line, because I love to, associate myself with being African, proudly African, right? And so this is a topic that I love to talk about. And Miss Deborah said something that is really key. She said, share with your people. And that's the thing. Most of our people, we don't talk about this enough. And the first thing that I was discussing with Ms. Deborah earlier was that we can't give what we don't have. Most of us do not know these things. But then now that we know, I find that some of our people are not receptive as well. However, that's not going to stop me from sharing the gospel to my people, because I really want to see my people grow. I call GoFundMe corporate begging. If you really, really have loved ones that you care about and you say you love them, you have to prove it. I've seen so many people in my community that pass away and they leave nothing for their loved ones. How can you have lived all your life so busy? You don't even have time for the kids, and all the hard work you did was for nothing? They don't have anything to show for your hard work. And that's the problem. So here's the thing: protecting ourselves should not even be a question. I'm not, if I find myself convincing you to protect yourself and your loved ones, there's a problem. You're not the right person for me to talk to. And secondly, we need to understand having the right protection. Miss Deborah talked about, having a whole life policy because she's older. Yes, when you're 70, at that point, you want it to last for a very long time. So we call it burial insurance or final expense. So you want to have something for your funeral, because at the age of 70, 60, 65, 70, if you don't have coverage at that time, you already started late. But then if you're younger than that and you don't have any coverage, or you do have coverage, I want you to take up your booklet and read it in its entirety. Because a lot of us are drowning and we think we're swimming. There are two types of insurance. We have the whole life and we have the term. The whole life, any kind of insurance you have, it's a good thing that you care for your loved ones and you protected yourself. I respect you, regardless of what you have. It's good. However, when it comes to the whole life, index universal life, variable life, adjustable life, when you pay in your premium, it goes into two buckets, which is the life insurance bucket and the cash value bucket. One thing you have to know is that that is a life insurance. There's a limitation on how far your cash value can go. That's exactly why you have a fixed guaranteed interest rate. It is historically lower compared to what you're going to get in an investment. It is not an investment. That's exactly why you have to pay a lot extra for a whole life policy because of the cash value. However, because these kinds of policy have cash value, there are a lot of fees associated with that. If you go to irs.gov, you can see the limitations placed on cash value insurance. That's exactly why, if at any point in time your cash value becomes more than the premium you paid into the policy, it ceases to become a life insurance, it becomes a modified endowment contract, which is a type of retirement plan like 401k. Because it's not an investment, it's not meant to give you monetary gain as such. And then a lot of people say, oh, you cash out tax free. Of course, you cash out tax free because you don't get to pay tax on losses. And so your cash value is meant to have a ceiling. So here's what I do advise. Your number one goal, setting up the right financial strategy. Your number one goal is to truly save on taxes on the front end and on the back end. Because if you give away so much in taxes, it's money that you can actually invest. So your main goal should be building your asset, which is your investment. As your investment is growing, you protect yourself simultaneously. We believe that if you have it set up the right way, your insurance is not meant to be a permanent need. It's meant to be a temporary need while your asset is built up. Imagine that you build your investment, you now have $1 million. You no longer need the life insurance. Now, the word is need. Eliminate the need. If you want it, that's fine. But at that point, if you want to renew the policy, you don't have to come out of pocket because at this point, you are self-insured and you have a lot of money in cash in your investment account. Because when you get to 65, you rather have $500,000 in cash than have it in life insurance. Because if it's tied down to a life insurance policy, the only way you can get that money is to borrow more money. And I believe that even though English is my second language, I do know that anything you borrow is not yours. When it's yours, you take it. You don't even need no paper or no one's permission to have
True.
access to your money.
That's true.
And your investment actually helps you to retire properly. Because here's the thing, right? I mean, like those people, Miss Deborah right now does not have so much needs because their generation, they're very comfortable with living okay. But as for me, I'm okay. I've been used to taking 2 vacations in a year. When I retire, I want to do the same. A lot of people look at retirement and they think of pay cuts and say, oh, when I was working, I would have been to Hawaii twice, but then now I'm retired, I can no longer afford it. I've worked so hard in my younger years. When I retire, I want to enjoy and play so hard. I want to enjoy playing. I want to enjoy playing golf with my grandkids. I want to enjoy spending my money because that's work too. When you
True.
go when you go to the mall and you spend 5 hours shopping, that's work. That's the kind of
True.
work I want to do when I retire. Because I'm working so hard. Like when you have a very good work ethic, right? I can sit on my chair at from 8 a.m. to 2 a.m. But guess what? When I retire, I want to live life on my terms.
True.
I want to be able to maintain my lifestyle. I want to be able to do what I love to do. I want my grandkids to enjoy me. I want the fifth generation to remember my name. Because I have chosen to break the curse, I want to build that legacy. And that's what investment can do for you. That's what setting up the right financial strategy can do for you. So, in summary, when you're choosing the right life insurance policy, you have to make sure that it's not something that you're paying so much into. And at the end of the day, you have nothing to show for it. You need to have the protection simultaneously invest. Because for the past 15 years, the market only fell 3 times. If you had invested, even when the market fell, it's called dollar cost averaging. You're buying it lower. When the market bounces back up, you make even more money. And that's why we have to consistently invest. Because guess what? If you don't invest now, you're going to use the money for something else anyway. You just have to do Uber Eats or take Uber or something, just do whatever, and the money is gone. If I ask you by this time next year, what did you do with that money you could have used to invest? You can't tell me how you spent the money. So the goal is that it's not about making money, it's about getting the money to work for you.
True.
That is the main goal. So when you're setting up the right life insurance, make sure you have the right financial strategy to do it the right way.
Awesome, awesome, awesome. Like you rightly said, your money should not be left in the bank because I know some people tell you, oh, I'm a good saver. I know how to save. I'm very disciplined. I can save. But having your money in the bank will do you nothing because inflation will overtake your money. So the best thing you want to do, find out what investment vehicle, what financial strategy are you going to pursue? Where are you going to put your money for you so that while you're sleeping, your money is making money for you. And whilst you're not able to work, should there be any accident, nobody knows tomorrow. We don't pray for anything bad to happen to any of us. But anything, life happens. And when life does happen, how do you safeguard your family? How do you continue life? How do you not stay frustrated? Because one of the reasons a lot of people stay frustrated is because there's no money. One of the reasons why couples fight, parents and kids fight, is because there's no money.
Right.
Once there is money to sponsor them to school, give them the best of life, once there's money as couples, you see there is less quarrel at home. So one of the bases is because there is no money. So we must learn this early enough to make us live a comfortable life so that we can also sponsor, support the people around us, so that we can be a blessing to our generation. Like I rightly said, a leader is one who knows it and shares it with others. You are opportune to know it, and God has put it in your head. Since you know it, give it to others. Be a blessing to others. Like a lot of you, not everybody's on this channel. Some people would stumble across this. You know that this is what people are suffering. This is what people and information that people do need. Then let's take it out there and share with others. Not just funny jokes, not just things, negative news, but things that can empower people with the little funds they have, where they can put their money, such that when they are sleeping, passively the money is making money for you. That's one of the level you want to get to in life. While you're not on the field working actively, your money is also bringing in money for you. So, and that's what Uche rightly said. Having the best financial strategy. And how do you have it? If you don't read, it is said that when you want to hide anything great to a black man, put it in writing, they would not read. And so, and that's why some of us do not have time to read. Some of us have time to read. Then you can leverage the help of financial strategists like Uche or myself to help you. So, and that's why I would say you have to read. Make a time to read. You might just read 2 pages a day, a chapter a day. We've got 24 hours in a day, but you can just discipline yourself. Life is not easy. Success is uphill. You have to make it work. You have to go stretch yourself. He said, what doesn't stretch you doesn't grow you. So, in order for you to grow, we have to be intentional. We have to be disciplined. We have to have what we call delayed gratification for future enjoyments. There's some things we want to put behind. Go through the pain now while you're very strong, not waiting when you're 70 and you start thinking of, oh, what strategy do I employ? Now you're younger, you have a lot of money coming around you. It's not going to be so all the days. There will surely be a day the money will not flow as you expect it to flow. So what have you done with the money when you had an abundance? When you have it in abundant form? What did you do with the money? And so that's why on this platform, we'll try to tell you what you can do. Financial discipline, financial literacy, and financial planning. You want to think of all this in order for you to be able to make money, manage money, and to multiply money. Uche, I want to find out from you. There are other platforms of investments that you can put your money in, and the money will not make much money because they are not tax free. I know of the Roth RIA, that's ERA. how do we put our money? What other platforms aside from Roth? Because I know that Roth has a ceiling. He gets to a particular point that you cannot put my money. So what do you do? Do you have to have a registered company? Do you have to have other means of putting your money in safe places so that your money will be tax free?
Yes, that's a very good question. Yes, the Roth IRA is actually a tax-free retirement account. If you want to put your money in a more tax-free retirement account, you have to own a business. And by the way, if you don't own a business, you actually, how would I put it? You're actually dashing
Enriching the
IRS
government.
money. You're dashing IRS money, right? Because this country is built for entrepreneurs.
Yeah.
Um, you have something to share. You always have something to share. We have something in us that we can share that can be an entrepreneurial venture. So if you go into entrepreneurship, you own a business, you can actually collect the expense to reduce your adjusted gross income, thereby getting more money back in taxes. And you can put it in your investment account to even grow more money. So we have what we call the solo K. So if you're an entrepreneur, you don't have no employee, you can have the solo K. That's a solo 401k. So the solo K has the Roth as well. And the maximum I believe last year was 22,000. So you still have that as well. Most people do not know about that. And then we also have the mutual funds. We call it transfer on death. It's a non-qualified account. Your first $50,000 profit is also tax-free as well. Then afterwards, you start to pay taxes on the extra. So there's a way. That's why you need a financial strategist that can look into your budget, look into your financial goals and objectives to determine how to help you save that money tax-free.
Awesome. But I found out again that you can have Roth IRA for your children, even though they're
Yes, you
still very
can.
tender.
Right. I do
Can you
have two
explain
kids.
that?
Yeah, I have two kids, a 10-year-old and a 7-year-old, and I do have the minor roles for both of them. Because I own a business, they both work for me. Because it's a family, it's a generational wealth that we're building. So they really need to, understand how this works. They help me shred papers, even my, oh yeah, that they help me shred papers, get my office ready. Um, Make sure they maintain that the 7-year-old sometimes displaces stuff, but it's okay. He's doing his job, right?
Yeah.
So with all of that stuff, and then when we go for physical appointments, I do that once in a while. I go with them. Um, I also do real estate investment as well. So when we go out, we all you know get dirty as well. So I do pay them from time to time. So they do have a bank account. So I pay them every month, and from that bank account, it's connected to their Roth IRA because they have no expenses. So the way I do have it set up in 20 years, they're going to have approximately $2 million because they don't have any expenses right now. So all their money is going to go towards their Roth. But the best part of it is that I can write off that money as a business expense. So I'm growing their investment, but I still get my money back. So it's fun, right? So they're growing their money tax free.
That's a smart way.
Yes. So that way I don't have to worry about them when I retire. I don't have to worry about myself because I know they're going to carry on that legacy. So there's several ways that you can actually grow your money and not having to pay taxes, so long as you're doing it the right way. Document it the right way. My kids have 1099. So long as they do not earn more than $12,900 in a year, they do not have to file taxes, and you can also file them as a dependent.
Wow, that's awesome. That's
Yeah.
awesome. So these are ways and strategies, like Uche rightly said, having the right way. And if you cannot do it on your own, rightly, everybody has information on their fingertips. But some of us are very busy. Round the clock we work. We're
Yeah.
actually not called to pay bills. We're called to enjoy, not work hard, but work smartly. So
Yeah.
if you cannot read and do these findings yourself, then you might want to just employ or get a financial strategist with a token if you have to do that. Or you'll find out some kind of this financial literacy program where you can attend for free or for a token to get empowered. Because rightly, when you get empowered, you have information at your fingertips. You're able to do things rightly. You're able to inform and change your community. You're able to touch lives. Because one reason we're not called to just pay bills. You know, some of us think about bills, bills, bills. I have car notes to pay. I have my mortgage to pay. I have this. I want to live this life, this standard of life and everything. Beyond that, God has not called us to pay bills. We're there, we can empower people. And that's when we begin to live a life of significance. It is said that life is not lived until we begin to live in others. Until people begin to cry for you when you're sick and say, oh my God, this is my bread. This is the person that provides for me. This is the person sending me to school. This is how I get my scholarship. This is how I pay. You know, that is when life is meaningful. That is when we are living a life of significance. And you know that by the time you do that, a lot of people are praying for you because they know that, Uche, whenever Uche calls, the first thing I get, how much is your bill? What is the school fees? How much do you need for your, you know? And that is one thing we need to do. We need to go beyond just paying bills. We need to go beyond just, working around the clock and having time with the family. Like I rightly told someone, I said, we take our time to make work for money. And later we use this money to take care of ourselves. These two doesn't go together. While you're working, enjoy this money. Because if you do not, somebody else will live on your sweat. Somebody else will live on what you've worked, your art, and even squander it because they don't know how you got the money. So whilst he said while you're working, you're playing, and you're also having time for the kids. And you're also teaching them this wealth knowledge. Otherwise, whatever you leave behind, they're going to squander it. They need to understand what it is you're doing. You need to carry them along, like you rightly said. You take them to every appointment. You sometimes get dirty. You send them on errand, things that they can do for their age range. You can't tell them to go do presentation for you. I know that. But little things that you cannot do that you think somebody else can do for you, why not delegate to them and pay them a token? And this helps them to grow with some sense of responsibility, some sense of maturity. Whilst their friends are talking about buying perfumes, buying cartoons, going to watch movie, they are thinking, oh, what property can I get into? How do I do this deal? And they're already thinking about money. They already have money. They're not begging. And like you rightly said, by the time your kids are 18, they already have $2 million. Means they're millionaire already. They can give to posterity. They can help non-profits. They can, pay people, as in send people to school, do a lot more. So with these lessons and these informations we're gathering together is a thing that we want to share with our secular friends. We don't want to keep this information with ourselves. We want to be a blessing. One reason why we're coming here is how to empower others who do not have time to study, but can watch a video while they're driving to work, while they're in the kitchen, while they're doing something. So I wanted to also explain to me this beyond that Roth IRA. What are in the investment? Because I heard someone saying I can't put my money in a mutual funds because mutual funds goes up and down. It's not safe. And because Roth IRA, sometimes you might not be able to touch it for the first 1, 2, 3 years. What is a better way to get into Roth IRA? Do you have other kind of savings that you can maybe an emergency fund, other funds that you can create in such a way that when you need money just at your fingertips, you can just reach out? Because I know with Roth IRA, you can take money from it. It's your money. You don't pay interest on it. And Roth IRA, would you term it to be mutual funds? Because a lot of people are scared to put their money in a mutual funds where there is no control on the inflation and when it drops down. What happened?
Yes, so people are scared of mutual funds for two reasons. They don't understand how it works, or secondly, maybe they don't have maybe they set it up themselves and they set up the wrong thing based off of information, feelings, what people are saying out there, and stuff like that. But if you have your mutual fund set up by an experienced, certified financial strategist, you should have nothing to worry about. And here's why. Because the Roth IRA, the solo K, they're all mutual funds that go, it's funds that go into that. There's a fund that I put most of my young clients into. It's a fidelity fund. It's called the Factor. This fund has given us over the 12.25% average annual rate of return since September 3rd, 1996.
Wow.
Yes. In 2009, this fund had a return of 92%. In 2010, this fund had a return of 28%, 26%. In 2011, the fund fell 9%. But guess what? In 2012, the fund bounced back 16%. So let's say you had 12,000 in 2009. When the fund fell, I can say this off the top of my head because this is analysis I do every day. So let's say you put in 12,000 in 2009, right? And it increased all the way to 29% in 2010. When it fell in 2011, it was going to go back down from 29 to 26. Now remember, 26 was not the 12,000 capital that you put in 2009, which was 2 years before. Now, when it bounced back up in 2011, in 2012, you now have 30,000. So it fell, but when it went up way more than what it was before it fell. Now in 2018, the fund kept going up. Some years it did 40 something, some years it did 18, some years 30 something, 20 something. Now in 2018, this fund fell 7%. In 2019, it bounced back up 50%. So people don't understand how the market works.
That's cost averaging.
Yes. So when it fell, you're buying it for lower. Imagine when it bounced back 50%, made even more money.
True.
So they don't understand. So it's the ignorance that makes people say, "Oh, I'm scared the market is gonna fall." It's like saying, "Oh, I drove out, and in front of my community there was an accident. I would never go out of my door ever again because I witnessed an accident." No, life is all about risk, but you have to take calculative risk, and this is a calculative risk that goes off of history, and history repeats itself. Remember, in September 3rd, 1996 was before the Great Depression. And this fund has given us an average annual rate of return of 12.25% since then. So people don't understand. That's why they say what they don't understand. And that's why you need to talk to an experienced specialist. If somebody tells you they're a financial advisor or a financial strategist or a financial planner, here's what you're going to do. Go to brokercheckfinra.org. Put in their first and last name. Click on search. If you don't see them, they're nothing. They're no financial nothing. They're either just an insurance rep or they want to be financial advisor. If you look at my name, type in Uche Akeeb at brokercheckfinra.org. You're going to see everything about me. It's not hidden. You're going to see if I have a disclosure, if I have any customer complaints, how long I've been doing this for. Everything is all there. It's very visible. I have nothing to hide. So if somebody tells you about the mutual fund, tell them based off of what? Based off of what certification are you giving me this advice? And go research them. It's all there on Google. There's nothing to hide. Or you can put their name on Google and it's going to tell you who they really are. That's why I'm not scared to say who I am, because I know when you put my name on Google, you see it. And then you see my credibility, and then you're going to come back. I've had people call me back after 4 months. Okay, Uche, I researched you and I'm ready now because I know what I have. So if they tell you, oh, mutual fund's going to go up, going to come down, based off of what are you giving me that information? I mean, like, what do you know that you're giving me that information? If you're not a financial strategist, you're not a broker check, you have no business telling me about investment or how money works or how to set up the right financial strategy.
Awesome. Awesome. I think the other time Debra Taylor. I don't know why I'm having.
I do have a question for Uche, if you don't mind. What other questions should people ask about insurance? I still have flashbacks about face values of policies and term riders and all kinds of stuff that get attached, but yet the person who's there is not telling you what that means. What are the details of all those little things? So to me, I want to know what are the most important questions a person should ask before investing in any policy or any investment. What are the most important questions we should ask besides, are you really certified? What else?
Thank you so much for asking that question, Ms. Debra. That's a very good question, very important. So when it comes to the face amount, when it comes to the life insurance face amount, yes, a lot of people are not properly protected because I had this family friend who passed away in April. He was only 37, had 4 kids, and his wife doesn't work. So the income depended on him. He's a six-figure earner. However, as he passed away, the income is gone and the bill never stops. But here's the thing. We found out he only had a life insurance of $5,000. He lives in a big house. His mortgage alone is 5,000. The wife don't work, and he had a what do you call it? A car note. He drives a Mercedes. His car note is about 1,125, which was okay because he earned over $10,000. So that was okay while he was alive, but now he's gone. His income is gone abruptly. So a lot of people out there are not properly protected. And that's exactly why we do what we call the financial needs analysis. Now, Sandra, I wanted to mention something. You said you rather pay, it's better, it's worth it paying a financial advisor. You are a financial advisor that can educate them for free. So don't let them go pay. Help them out, sis. Okay. Yeah, so we do a free financial needs analysis. Myself and Sandra do that. And that way we analyze your income and expenses. So if you're younger like myself, and I know that most people in most household in America is a two-income household. So somebody like myself, who I know that I highly contribute as much as my husband as well, I cannot go get a $50,000 life insurance. I'm not properly protected because if my income is cut off, they would have to struggle. Somebody like me should not do anything less than 300,000 because my mortgage my mortgage, I have $300,000 left for the mortgage. If that's the only thing they pay off, at least my husband can take care of other things. And Miss Deborah, for you, your kids are grown, and you don't have that much responsibilities. So 25,000, 50,000 is good because that would take care of the funeral. So it all depends. So ask them, how much is the minimum for me face amount to get for me to become properly protected? If they do not do a financial needs analysis for you, because some people don't, um, ask them how much you really need. What's the minimum for me to be properly protected? That way they'll go through your income, your expenses, your bills, and all that good stuff. It is very important so that you don't leave your people stranded. Because what happened was that our family friend, he bought a very big home because he was well off while he was alive. And after he died, the wife and the kids had to leave the home because they couldn't afford the home anymore. They had to give away the car because the wife couldn't afford that anymore. They had to start living with the pastor. And this is somebody that your husband was rich when he was alive, and now you're screwed.
So does it mean that he never had any good friends to share or advise him that you're making money now? This is the
We
time to put money
actually,
aside.
I can testify. We actually walked up to him and we spoke. It's a very funny story. We walked up to him in December because he purchased the home in December, and I said, "Now that you have this home," we walked up, we went to his house. Now that you have this home, you need to protect yourself. He was 37 at that time. A $300,000 policy was going to get him $47 monthly premium, which was nothing to him. He was about to sign up, and his wife texted him from upstairs and said, "Don't do that. They're just salespeople." But guess who did the GoFundMe when he passed away?
Your wife.
We did it. She's
Wow.
she's mourning. She can't. She's mourning. She can't do the GoFundMe. She's mourning. We did the GoFundMe.
Oh
But
my
guess
God.
what? I tried my best. My conscience is clear that I tried my best. So now the man was our family friend. I mean, like we were not as close to her. So if I don't check on as much, I'm okay because I tried. If I had set him up for $300,000, he would have paid only 3 months, and the wife would have done $300,000 to take care of herself and her kids. But now, I mean, the pastor got her though. Hopefully,
How do you
So
know it was the wife that stopped him?
oh, men, oh my goodness, men can throw you under the bus with the split second. So he was about to get signed up, and his wife sent him. He's like, look at. My wife says, so I'm sorry, it's out of my hands. So that's how he threw her under the
Oh
bus.
my God.
He
Little
threw
did
her under
she
the
know the
bus.
guy was going to pass on.
Yes. So she called when he passed away. She called and she was like, Uche, how much is that stuff? I'm like, what? Calm down. What?
Feeling.
Like life insurance. I'm like, what happened? He actually got diagnosed for cancer of the kidney, but he passed away 2 weeks after I got that. That was what it happened so quickly. And I told her you can't sign up for life insurance. You're not working. You can't do nothing at this point. No, but when you get yourself situated, you can get life insurance for yourself and your kids. So that's the thing. I'm glad you brought that up, Miss Debra. And secondly, ask them what is the cost of insurance? What does it look like? Because here's what happens. I've had to analyze a lot of policies, right? Even though I say term is good while you invest, a lot of people tell me, oh, this one says it's $20. Why is your own saying 47? When I analyze the policy booklet, I find out what they have is renewable term. What it means is they have low introductory premium, and when they get to year 6, the premium jacks up. The rep does not tell them that, but at that time they're older, so it's more expensive, or they've developed a kind of illness that makes them uninsurable, so they're stuck. And it continues to jack up. Because I had one of my clients. We said, "Oh, I'm good. I have the term. I just want the insurance." I'm like, "Do you mind showing me your policy so I can analyze the policy?" And when she showed me, we found out that she was paying $60 something for the first 5 years. And starting from the 6th year, it was going to be 200 and something. Starting from the 11th year, it was going to be 500 and something every month. So ask them, is my cost of insurance going to be the same for the locked in 30-year term, the locked in 35-year term, 20 years, whatever term you choose? Because what happens with some whole life policies is that the cost of insurance increases every year. And it gets to a point where the cost of insurance becomes more than the premium you're paying into the policy. So when it gets to that stage, because for a whole life policy, you signed up for what we call the automatic premium loan. So when it gets to that stage, the company has the right to dip their hands into your cash value and make up for the cost of insurance. And your cash value starts to deplete. When you need it the most, you realize you have zero, nothing, everything is gone, and you put in so much to fund this policy. A lot of people are no longer able to continue when they retire because it's so much, so expensive. At the time your cash value becomes zero, they have to call you and tell you that the premium is increasing because you can no longer fund your cash value and what you're paying is not enough. So ask them about how the cost of insurance works for that policy and is it locked in for the number of terms I'm getting or is it locked in for my entire life? Some reps will lie because they don't know, but some reps will tell you the truth. So what you're going to do is call the actual company to confirm what you have because that's the company is who is going to pay the claim if anything happens. But that was a very good one that you pointed out, Ms. Deborah.
See, those are the kind of questions I wanted to ask and have answered for whoever is listening, and for I was making notes while you were talking. Those are the things I want to know because policies, you can find out that after so long you have nothing and you've been paying for years. And I've
Yeah.
even had a person who was an insurance company owner. She had her own business. She was just talking in general, not specifically to me, but she was bragging about how insurance companies do very well and only like 2% pay out on their policies. They get to keep the rest. And that to me is I mean, I know they're running a business, but in a way it's dishonest because they've made money off of you they know they're not going to benefit you with. And insurance should always be a benefit.
Right.
That was one thing that I had to change my mind on. I didn't believe in insurance until I discovered how it could help. Like the young man you just described, making $600,000 a year, but only a $5,000 policy. No, that doesn't make sense because you got a home you got to pay for. So when you do analysis with people, do you ask them all of that so that you can make sure that the value of the policy is appropriate coverage? Is that
Yes.
something that you do and you advise people to do?
Yes, that is something that I advise people to do. The analysis just we ask them for the income, the mortgage, their credit card debt, their car notes, their educational loan. Because in America, when a spouse dies, the partner inherits the debt. I also heard that when somebody dies, if they don't have a spouse, the next of kin in the country inherits their debt as well. So choose your beneficiary correctly. You don't give it to someone who's not going to bear the brunt of your debt, right? So that's another thing. So when we do the analysis, we put all that and we advise you that this is how much you need to have minimum to be properly protected. Some of my clients do not have the funds to cover for that minimum, but now they know. So it's like a GPS. Because remember, you can increase your coverage at any time. So now they know. So let's say you're due to your expenses, you need to have $500,000 to face amount to be properly protected. We're like, you know what? Let me do 300,000, and then we have what we call the automatic increase rider. So every year your policy increases by 10%, the face amount increases by 10% and 10%, 10% until it gets to where you want it to get to. So that plan is there. Or anytime you feel like, okay, now I have the money, you can increase the debt benefit. But at least now you know what you're working towards.
Another quick question for you. I hope it's a quick question. Is that God is good. He's always reminded me of the things that I want to do and ask.
Can we take a
But
minute
another
break?
question. Can I ask her this real quick before you break?
Okay.
Okay, real quick. Another thing that I learned along the way is I converted term to whole life, but the premiums I had paid in the term no longer counted. It was as if I was starting all over. So while we're on break, uh, think of the information you can give regarding that so we can tell people how not to pay into a policy, then convert it and lose what they've already paid.
Right.
Are you thinking
Thank
of
you,
how to
Sandra.
publish your book on Amazon or how to get your published book to become an Amazon bestseller book? Dip Insight Books is the perfect in-between solution in transforming your ideas into a book. We can help you with all the complicated parts of publishing, such as process TO transformation. What we do: full manuscript evaluation, receive quality assurance edit, full copy edit and final proofread to remove spelling and grammar mistakes, oversee your cover design, create your interior layout, publish and distribute your book, lock down your marketing strategy. Ghostwriting, where there is no manuscript. Our goal is to help you publish your book promptly. Contact us today at 404-740-9091. Email us at info@dipinsightworld.com. To start the submission process, check us out at www.books.dipinsightworld.com and submit your details. You can visit our Facebook page at Dip Insight World.
Welcome back. Thank you.
Okay, yeah. So to what Ms. Debra talked about, the question was, can you remember the question again? I think. Oh, you're mute. You're mute. You're mute.
Sorry. It was about if you have a policy and you choose to convert it from term life to whole life, the premiums you have already paid don't go towards that whole life. It's like they zero it out and keep your money. How do you guard against that?
Yes. So remember, life, you have your protection, and that's the goal. So Insurance is in case something happens before your investment is built up. That's why we say it's good to have the right financial strategy. So if you're below 65 and you have the term life, even if it's the convertible term, ensure that simultaneously you also have your investment going on. So what we do is based off of your budget, we split your money and make sure that your investment is going simultaneously as your life insurance policy. So if you come to us and we give you the right financial strategy, we don't set you up for just life insurance. We set you up for both. So at the time it's going to get to when it's going to convert, you might not have to convert it anymore because now you're self-insured at that point. Because that's how we're going to have you set up. So while you have a convertible term, renewable term, any kind of term policy, any kind of insurance, ensure that you have investment going for you simultaneously so that your asset will be built up when that runs out. That's the right thing to do.
So I also want to find out, how do you set up funding for school for kids? When you have your kids in school, they're still very, paying any fees. Now you want to get their education, well funded, such that when it's time for them to go to college, you don't have to, not all children get scholarship. Some can get scholarship, others are out of scholarship. So how do you help the others that do not have scholarship? How do you send them to school without grumbling, without having to pay out of pockets?
Yeah, so that's where the minor Roth and college funds comes in. Remember, for the minor Roth, they can use it for college as well, and they have other options to use the money. Because one thing about the minor Roth is that Roth is a retirement account. However, you can use it before you turn 59 and a half for qualified expenses, which is number one, purchasing your first home. Number two, your education or your kids' education. Number three, medical expenses. And number four is if you've had the account open for at least 5 years, you can withdraw all the principal to do anything, no questions asked, no taxes, no penalties. So that helps. Oh, you're mute.
Yeah. So what happens if I take out the principal? Does the money still keep growing?
Yes, because remember, if you've had it for at least 5 years, you would have had returns.
Yeah.
So your return is still growing, yes. So long as you still have money in there. Because remember, as the return is growing, everything is your money. So the profit in there, the interest is still working for you, still getting more money for you. That's the thing. Then we also have collect funds. Collect funds 529 Coverdale, based on your what do you call it? What you qualify for, your qualification will determine the one that you can set your kids up with. So we do have that. So it's better to set your kids up with that right now before it's too late. What As soon as they're born, set them up, get them a college fund, get them a minor Roth. My kids have the minor Roth, and that's gonna work out for them because I love the minor Roth because they have options. What if they get scholarship? But yeah, the college funds, the Coverdale, 529, and the minor Roth does the work, and it eases your stress too. You don't have to worry about their education. And I do hate the fact that a child has to incur a debt as soon as they graduate, and when they start working they think about paying them. I have a friend that as we were at work when I had my 9 to 5, she had $150,000 college fund there. So I was telling her about purchasing a home, and she's like, because we got paid a lot of money at that job, and she was like, "Oh no, I want to pay up my school loan before I think of purchasing a home." So she's backwards. But then you put your one step forward. You don't have to think about debt. However you see debt is debt. And it's really something that we shouldn't get our kids into. If we can't do it, it's good.
Oh, that's awesome. Thank you for that information. And I want to just check if there's any more comments or questions from the audience who might be on this show. Deborah, can you see any? I don't think there's any question.
No.
Well, perhaps if there are no questions, then we might have to call it a day. Thank you so much for your time. Really a mind-blowing session. Thank you, Deborah Taylor, for the
Thank you
questions.
for having
Thank
me.
you.
It's been my absolute pleasure.
Yeah, and Uche, thank you too for making it funny.
Thank you for having me.
I also want to thank our audience. Thank you for. I think Deborah, you need to mute. That's why we're having the echoing. Thank you. I also want to thank our audience too for being on this show. Thank you for joining us. And like I earlier said, if this has been great for you and you want to share, please take the link and share with others. Let's share information. That's the only way we can change our world. That's the only way we can make a difference. Sometimes you might not have funds to help people. You might not have the money to support them or the right advice. Sometimes the links or the videos, the conferences we attend, information gathered there can be a blessing to others. So that's why I said beyond just giving money, you can also give things that are intellectual, things that you can buy with money. You can share such information, and such information will go a long way to help them to set up funds for their kids, set up college funds, set up themselves for success. Like Deborah shared a story of burying her parents from our retirement benefits, thereby, depleting our retirement funds. We don't have to do that to ourselves because you get to an age or a particular time in life, you don't have the same strength you have when you were a young youth at 30. At 70, it can't be the same. So you want at that time to be relaxed, no more pressure of paying any bill, pressure of paying your mortgage or anything. So, like I rightly said, delay gratification for future enjoyments. There could be some things that you're enjoying now. You could put those money somewhere in a Roth IRA so that you can, compound them. Like Uche rightly said, then later on when you need money, you can take a principal. The returns is already there for you, making more money. So even if you decide not to put money aside, you have something growing for you somewhere. So, and don't deprive your family of the life. How can you have a property, have a housing and everything, and you do not do insurance? If you love your loved ones, it is said that a good man leaves a good inheritance for his generation and generations thereafter. So if you're a good father, you're a good mother, you want to secure the ones you say you love. You don't love them by just mere words. You love them by the actions and the things you do to safeguard them, to keep them safe. So by taking action, looking for a financial strategist, you might want to reach out to me, Sandra. I'm going to put my number at the description button. I'm going to also put Uche should you want to reach any of us. So feel free to reach out to people. It is said that knowledge gotten, experience is not, you don't want to have a bad experience. Like people will rightly say, experience is the best teacher. No, an evaluated experience is the best teacher. Once you have evaluated your experience and you know what to do the next time, you'll be able to teach others. So I want to say thank you to our viewers. Thank you to also our guests who have made time to be on this show. Thank you so much. Do have a lovely and a restful weekend. Until we meet on our next episode, do have a restful weekend. Bye, everyone.
Bye.
Bye.